All right, we're live. Happy Sunday, my family, my YouTube fam. I have Will Butler here from Magic. Why I wanted to say Magic? Magic
Oh no,
Mortgage.
what's going
Yes.
on?
So if you guys have your financing questions, this is the person to talk to. Let people come in. Hi, Janet. My girl's almost first today. I'm so proud of you, Janet. Yep, happy Sunday. You are on time today. I love that. How was your week? Hey, Pedro. Well, are you able to see the comments?
I don't see anything though.
Oh, okay. Mm-mm. Janice said, great week. Mentally preparing to go back to school next week. Ay. School is next week already in Jersey. Hi, Melanie. Girl, we're heading into the third week of school already. September 2nd. Oh my gosh. Does New York start around the same time or do they start later? Me muero. I felt that, Janet. Hi, Eileen. This is Will from Magic Mortgage. He's one of my preferred mortgage brokers. New York starts September 4th. Ay. That is next week, right? September 4th. Is September 4th next week already? Oh my gosh, guys. Yeah, September 4th is next Thursday. September 2nd is Tuesday. Oh my gosh. Hi, Karen. Melanie said, wow, my daughter has special needs, so she keeps me busy 7 days a week. I definitely felt that, Melanie. Melanie, does she go to school, like a special school, or you do everything from home? Karen said depends on the type of school. My daughter starts charter high school August 28th. Wow. So my oldest son, his birthday is on the 28th of August, and he's about to be 15. And you know what? And it's hitting me that like in 3 years he's gonna be 18 already. Like what? 3 years goes by so fast too. It makes me sad. All right, guys. So we have Will here, who, like I said, he is one of my preferred mortgage brokers. So he's the finance guy when it comes to loans and things like that. So this is a great opportunity to talk to him, ask him questions, right, without him having to pull your credit. I really want him to talk about our subject for this week, where it's what's the better way to go, right? $10,000 off the purchase price, as an example, that amount, or seller concessions, right? Like, what do you think, Will? Is it depending on a certain scenario? Like, what have you been seeing? I can't hear you, Will. All of a sudden, I can't hear you. Yeah, I can't hear you. Mm-mm. Let me see. Yeah, that's weird because device is not connected. Okay, hold on. Guys, I'm looking crazy right now. I feel a little bit under the weather. Vic started yesterday and I started today and I feel like crap. That's what happens when the kids go back to school. All right, let's see.
Mic check.
Now you're good.
All right, beautiful. Well, I think that it always just depends. I am a little bit.
Wait. Let's introduce yourself to my YouTube fam. How long you've been in the industry, things like that. A little bit about yourself.
Sure thing. My name is William Butler, here local to the Orlando, Florida market. Been in the business now since 2011, when I turned 21. So I've been in finance pretty much my entire adult life. Has its ups and downs, the things that are exciting, the things that are stressful, but overall love it. Love to serve people and be able to just, kind of make the American dream come true for a lot of people.
I love that. So are you originally from Florida?
No, I'm actually from the Bay Area, San Francisco, but yeah, I've been in Florida pretty much all my adult life. I moved here when I was 12 to Miami, actually, and then Palm Bay, Brevard County for about 9 years, and then been in Orlando now since 2015.
So okay. I didn't even know that. That's nice. Okay. And you're married, you have kids?
Married with 2 kids, 5 and 8. I negotiated with my children. I told them I'd give them ice cream if they were quiet, because my wife's out of town right now, like we were talking beforehand. So yeah, they're in the other room just being quiet somewhere, doing Lord knows what. But
sometimes they're a little too quiet and you have to get up and go check in on them because it's like, what are you doing? Because it's way too quiet in here.
Yeah. I'm sure they're fine. Probably just playing Roblox or something crazy.
I love that. Okay. So as far as the question that I asked, right? Like, what are you seeing? Are you seeing that a buyer is getting a better deal if they ask for seller concessions versus the purchase price?
I've been seeing closing costs getting closing costs paid, in my opinion, is way better than keeping the price. Like, let's just say, you had a property that was $350,000, and you were going to pay your own closing costs, as opposed to you found a property that was $360,000, and the seller's giving you $10,000 towards your closing costs. So up front, there's a net difference, or really it's the same $10,000. It's just how that $10,000 is allocated. And in my opinion, I think it always depends what option's better. Everybody has different situations, but 9 times out of 10, getting your closing costs paid as opposed to you paying your own closing costs is much more beneficial to the home buyer. I did create a little breakdown if you wanted me to walk through everybody.
Yeah, I would love that.
How do I do that on here? Let me see.
All right, hold on. Let me. Present. Let me see. How can I? That's a good question. Let me see.
I think I can figure it out. Give me 1 sec.
All right, guys, hold on 1 second. I'm just trying to figure out how he can present and share his screen. Let me see.
Yeah, I'll just share it right from Canva. You see that?
There we go.
All right. So in example number 1 here, you have a $350,000 loan or purchase, I should say. And if you're paying, where it says CC here, the buyer's paying your closing costs. So in this example, in scenario number 1, you're buying a home for $350,000, and you're paying your own closing costs. So here's where the major breakdown is between 350 and 360, where the seller's paying your $10,000 towards your closing costs. If you're paying 350, the goal of this, the reason why you would want to pay your own closing costs is if you wanted to, to keep the price of the home, as well as your payment overall, you want to keep it lower. this would be a good option to do that. For a home that's $350,000 and your down payment of 3.5%, which, I've done the math beforehand, is $12,250 for just your down payment. So in both scenarios, you're bringing $12,250 at the minimum to the table. This example on the left-hand side, you're paying your own closing costs of $10,000. So you would bring $22,500 in scenario number one, whereas in scenario number two, you're bringing $12,250. Here's the major difference between the two and why I always recommend probably having the seller pay your closing costs, even though the payment would be higher. First off, the payment is $2,060. This is just principal and interest. Okay. So scenario one, $2,060 for a home at $350,000. What I like to do is I like to break down how it would make sense. And the way that it makes sense to me is if I'm getting $10,000 today upfront, how long would it take me to recoup $10,000 at $59 a month, which is the difference between $2060 and $2119. Okay, it's a difference of $59 per month. In order for me to recoup that $10,000, it would take me 169 months to be able to do that, or 14 years. It's like 14.1 years for me to recoup that $10,000. So in this example, if I took the lower overall payment, but I paid all my own closing costs, if I sold the home or I refinanced the home inside of 14 years, I actually lost money. As opposed to if I got the home for $360, the seller pays my closing costs. I pay an extra $59 per month. If I sold or refinanced the home within those 14 years, it's a net positive for scenario number two, where the seller pays the closing costs. And I'm bringing less money up front. And so that's why I always lean towards scenario two, where just take a higher price, have the seller pay the closing costs. Most times it's net positive for you to do that, because 14 years, guys, the reality is most consumers, most people who buy homes, they stay in the home for 5 to 7 years on average, 5 to 7 years. So if you do something in 5 years, you just lost out on all of the difference of the credit that the seller gave you by going with option number one as opposed to option number two. Does that make sense?
No, that definitely does make sense, and I could definitely appreciate the breakdown. So of course it's gonna go for everybody has a different scenario, but yeah, I think I agree with you in the sense of take the seller concessions versus being like, oh my gosh, I need money off of the purchase price.
Exactly.
And so, okay, talk to us about interest rates, because everybody's always interested in about interest rates. Do you see the interest rates going down? Tell us what's happening in the mortgage market. Like, tell us.
Absolutely. Well, there was already an 1/8% drop on just Friday alone, because all of the data is suggesting that the job market is not looking as hot as it was in the past. And whenever the job market is declining in terms of new employment, things of that nature, that impacts rates in the right direction. And when I say the right direction, I mean rates coming down. So Jerome Powell, everybody's already on board to lower the rates. There's going to be 4 reductions over the next 12 months. And the first major swing is anticipated to happen September, like mid-September. I believe it's September 14th, if I'm not mistaken, where they're having the next Fed meeting where they're going over all of the numbers, which is why we're already seeing rates coming down, because all of the lenders across the country who are lending out their own money, they're already hedging the fact that, hey, rates are going to come down. So we're already seeing some of those benefits today, as opposed to waiting 3 weeks or so until that meeting actually occurs.
And do you know, is this, I think I heard that the interest rates, because I know you said 4 rate drops within the next 12 months. Is 2 of them supposed to be before the year ends?
Yes. Yep.
Okay.
Absolutely.
Okay. Pedro said builders prefer closing costs and concessions as opposed to lowering price so that it doesn't affect the other homes in an area he may also have for sale, in my opinion. Yeah, so a lot of the builders, yes, they won't. I mean, you'll have some price decreases, but yes, they do give a lot of those seller concessions, those closing cost concessions, because yes, it could initially affect the essentially affect the appraisals, right? So yeah, absolutely. Sean said I would have seller pay closing costs and take that 10,000 and try to pay and plan to pay down 1 to 2 point interest rates. Can you talk about that, Will, as far as how does that look with buying down the interest rate? What does that normally cost? What does that depend on?
That it all just depends. So there's no exact set figure. Like let's just say I had a home for 500,000. 1 point is basically 1%. So if I wanted to buy down the interest rate and I wanted to pay 1 point of $5,000, that $5,000 may not give you, like, it's definitely not buying down your interest rate a whole percentage. It's just 1% of the cost to buy it down. So that could save you a 1/4%, maybe 3/8% lower rate, but it's not going to be that significant of a swing. Here's what my recommendation is right now. If you're buying and you're looking to close on your house at any point this year, just close with whatever the market rate is, because the likelihood of you refinancing in the next 12 to 24 months is extremely high. If you close this year and then rates in the next 2 years, they've already said rates are expected to go down 200 basis points. So let's just call it 2%. So if rates right now are at 6%, they drop down to a 4%. Buying down the rate and spending that money just goes back to the same exact example that we're looking at right here. If I spend the money buying down the rate and then I refinance anyways, if I pay $10,000 to buy down my rate, my payment every month looks better on paper, yes. But if I threw $5,000 into buying down the interest rate where I'm saving $50 a month, how many months do I have to make that payment for that $5,000 to make sense financially? And so when I see these things, I look at them as, what is the net positive for me? How long do I have to hold this mortgage for this buy down to actually make sense financially? So if the difference is, let's just call it $50 a month, and you paid $5,000, it's very simple, guys. You just take 5,000, you divide it by 50. It's 100 months. Probably should have knew that off the top of my head. It's 100 months, and we divide that by 12. It's going to take me 8.3 years for me to break even on that $5,000 that I paid up front, as opposed to using that $5,000 to pay those closing costs and keeping more money in my pocket.
Okay, that makes sense. And a lot of people say this, right? Where once the interest rates go down, the purchase price goes up, right? So if you can afford a mortgage payment at, let's just say, in a 6.5%, right? But you got in at a really good purchase price, then yes, if the rates are set to come down 200 basis points within the next 2 years, you said?
2 years, yeah.
Yeah. You can refinance. So what's the refinance process?
Refinancing is very, very simple. It's basically the same process of when you purchase a home without all of the deadlines that you have to take into consideration. And a lot of the times, like, you'll see things that say, hey, refinance, no closing costs, things of that nature. That's really just a kind of a marketing ploy, if I'm being completely honest. There's still a cost associated with it. You're just not coming out of pocket to pay it. So the real benefit to this when you do a refinance is that you can use the equity that you have in your home to pay the closing costs for you. So you can just have all of that stuff covered. If you close, like, let's say I helped you purchase a home, you wanted to refinance in the next 2 years, it's literally the same exact process of purchasing a home, just without having agents involved and without all of the timelines that are really, you have to take into consideration. But most times it's much quicker, it's fast, it's simple, and it's pretty easy.
All right. I love that. I love that. Do you guys have any specific questions for Will now that you guys have a lender on here, right? If you have any questions, now is the time. So Will, when it comes to new construction, right? How are you guys because we've done some new construction deals together. How are you What are you doing with taxes? Like, are you escrowing the projected taxes, or are you doing it based on what the current year taxes are?
I mean, you can set it up both ways and close both ways. It just kind of depends. So, like, we're still going to qualify you on the mortgage itself based on what the projected tax bill would be. So we'll have to do a tax estimator and use that for qualification purposes. But in terms of your actual payment, if you want to keep more money in your pocket at closing and then understand your payment will go up after the year, what have you, sometimes we go that route. But it's really just a conversation and educating, the buyer so that they understand what, both options, and then they could decide what makes the most sense for them.
Yeah, no, I definitely understand. Stevenson said Jerome Powell didn't guarantee any rate cut, but he did mention the cut would be depends shifting economic conditions and concerns. I don't.
Is that a question?
I guess it's more of a statement.
Yeah.
But we've already been seeing the effects of the interest rates going down little by little. So what's the interest rates sitting at right now?
On conventional, it's at 6.5. And I'll give everybody some free game who's on this live here. A really, really good non-biased third-party website that gives you all the data that you would need in terms of where the rates are, as well as it has new posts coming out every single day of experts talking about things that are happening in the market, what's changing the market, what's impacting where rates are, is mortgagenewsdaily.com.
mortgagenewsdaily.com. I'm going to write that for you guys. Mortgage News Daily.
And when you go on there, the pretty cool thing, like today, you're not going to see any movement because the markets are closed. But on Friday, rates dropped about 0.1%, right? So just for context, if you were buying, let's say you lock your loan in on Thursday, and let's say it was at a 6.6. If you locked in on Friday instead, it was a 6.5. So I actually have a client right now, and what I'm advising people is, hey, we probably don't want to lock right now. If you're closing in the next 30 to 45 days, don't lock your loan, because what we want to do is we want to get you the best possible price at the right time that fits within the constraints of what your purchase agreement says. So if you're closing in 30 days, we got to lock inside those 30 days, right? But if you have 45 days, 60 days, hey, let's not lock until that meeting occurs. And if you are, very risk averse, you don't want to take any chances. If you're comfortable with what the payment is, then I advise just lock. If you're good with all the numbers, but if I'm buying today and I'm under contract today, I'm not locking anything. I'm going to wait until that meeting happens mid-September because, just the adjustment on Friday alone is pretty significant. I mean, if you take a home, just for conversation's sake, let's say I have a property right now. 1 second. I'm going to price up the difference of on a home with 350,000 at a 3.5%. I'm sorry, a 6.5% rate as opposed to a 6.375, which is 1/8%, which again was the movement that happened on Friday. I'll show you what the actual difference is because it can be pretty significant. So at a 6.5 on a 350 purchase, you're 1 second here. I got this scenario from this one. All right, so this one was $300,000. At a 6.5% on $300,000, your mortgage itself, so just the principal and interest, is $1,861. The adjustment that happened on just Friday alone, the same exact scenario, same everything. The difference is when you're locking, it goes from 1861 down to 1837. So it's not changing the world. However, I've seen loans not be able to close over $25 a month. And sometimes all you need is that small adjustment so that you can qualify and get into the home that you really want.
Yeah, that's crazy. Sean said, I'm at a 4.6% now. I feel if basically stuck right now in my home. If I sell, then what am I stuck with now average interest rate is between 6 to 7%, then I'm paying much more. So I mean, Sean, what I would say is that you could also look into, depending on your area, brand new construction, right, where they're offering interest rates as low as a 3.99, right, some at a 4.5, some at a 4.99, which would be in the area that you're currently at right now. So but if you're looking for a resale home, then yeah, absolutely, you're going to be within that percentage, unless you're buying down the interest rate. And then, but again, everybody has different goals, and so that's why I wanted to have Will on here, because he's the expert when it comes to the interest rates, the mortgage process, and all of that stuff. So it's always really, really important to have a conversation and come up with a strategy, right? Because it may not happen tomorrow, right? But if you have a game plan, you know what you're working towards. Stevenson said, wouldn't we have to pay closing cost again to refinance? Yeah, that's what Will said. You have to pay closing cost again to refinance, but sometimes you can take, if you already have some equity built into the home, you can use that to pay the closing costs. Correct, Will, if I'm correct?
That's correct, yep. So a lot of times you never really even feel it. It's just the cost of appraisal, essentially. And like what we do for our returning clients, we'll eat the cost of the appraisal. And then we'll also waive underwriting as well. So we can keep the closing costs down for our returning clients, which is typically a savings of about $1,800 on closing costs alone.
Okay, Karen said, is it better to make a hefty down payment? Karen, I haven't been to school in a really long time. Is that greater or less than? Because isn't the pointing going to the left, isn't that greater because you could make a G? That's less than, babe?
It's
So
not. Oh, that's crazy. That's
I
hilarious.
don't the nope. Okay, so greater than to pay to pay less of a monthly mortgage payment, or just pay the 20% and keep more money in your pocket each month.
Again, I think that it just depends. It depends. If you can put 20% down, a lot of the times it does make sense to go that route. But I'll tell you guys another little secret that most lenders won't tell you. There's a thing called loan level pricing adjustments that every lender is actually impacted by, and certain pricing adjustments are put in place by the government, and then other ones are also put in place by the actual lender itself who's funding the loan. And back in, this might have been 2023, there was loan level pricing adjustments on a federal level that everybody had to take into consideration that would actually negatively impact people. If you had great credit and if you were putting 20% down, your rate would actually be worse than somebody who had a 680 credit putting 5% down. Sounds stupid. Sounds absolutely ridiculous. And you wonder, why would that be? I'll tell you why that happened. The reason that happened was back in 2023, it was the Biden administration that was in place. It might have been 2022. They said, hey, we want to make home buying more affordable across the board. And we want to help more unqualified people qualify for homes by giving them incentives. So what was happening is the more qualified clients were actually eating the cost and subsidizing those costs. So you're being penalized to help out your neighbors who are less qualified and less financially responsible. And so what ends up happening in a lot of cases is when these scenarios come across my desk, we'll look at it and say, hey, 20% down, here's your rate. The benefit of going 20% down is obvious. And the obvious part of that is there's no mortgage insurance. And depending on what your credit score is, depending on the loan size, your mortgage insurance can be $100, $200, $300, $400 per month. So it can make sense to want to put 20% down to have those savings, right? But if you wanted to have the lowest possible interest rate, a lot of the times what you could do is you can go 5% down and then do what's called a recast. And the reason you would want to do this is you don't have to pay, or you're not negatively impacted by those regulations that were put in place where you're negatively impacted for being more qualified. You can go 5% down and do what's called a recast after you close. The way that a recast works is, let's just say I had a home, and I'm going to keep it as simple as possible. let's say the home is $100,000, just to keep it as simple as possible. And I wanted to put 5% down. So my loan amount now would be what? $95,000. Okay. As opposed to if I put 20% down, where my loan amount would be $80,000. So the way that a recast works is after you close on the house, you pay a fee to the servicer, whoever you're making your payments to. And it's a small fee. It's anywhere from $150 to $300. And if you're putting more than $10,000 down, they will actually re-amortize your payment over the same 30-year span, but adjust what your actual loan balance is so that your payments actually drop. So if I closed on a house today, and let's just say a month or 2 months later, I came into a lot of money, and my mortgage payment is $3,000 per month. But I came into an extra $100,000, and I want to pay down my mortgage. I take that $100,000, put it on my mortgage. Now I have a smaller balance on my loan, but guess what my mortgage payment is? Still $3,000 a month. So what recasting does, if I have a $500,000 mortgage per se, and that's what is currently still financed, if I do a recast and I put that $100,000 down, now my payment is broken down over the new balance of $400,000 instead of the $500,000 balance, which it operates the same way as if I closed by putting that much money down. But the benefit to you is it re-amortizes your payment, so your payments actually drop when you put more money down post-closing, and you're not negatively impacted by the loan level pricing adjustments for being more qualified.
All right.
I know that was a lot of jargon, so if anybody needs me to expand on that, please let me know.
Yeah, definitely. Write in the comments. Sean said, how many point drops are we expecting on this year's interest rate?
That's an impossible question to ask. But I mean, I would expect 0.5% by the end of the year, at least.
So we're what, at like 6.5 now, you said?
6.5 conventional. If you're well qualified on FHA, VA, I mean, you're already in the 5%.
Got it. Okay. Glory said they say it's bad to pay off debt before you buy a home because it will lower credit score. But what if you want to pay off all your debt so you have less things to pay, so you're not living paycheck to paycheck?
I don't know who's ever said that you don't want to pay off debt. The only time you don't want to pay off debt is if it's like an account that closes once it's paid off, like an installment loan, a car, things like that, where when it's paid, it closes out. If you pay down credit cards, like you can do that all day and you're not going to be negatively impacted for that.
And it's not to say, like, sometimes people think that they need to clear off all their debt, right? You may just need to get it to a certain credit utilization, right? So that it's better on your credit score. Is going to be better. It's going to be a better thing for you as far as credit interest rate is concerned, right? But I think it's sometimes that people think that they need to pay it off, everything off, when I don't think that's necessarily the fact. I think that as long as you have it within those credit utilizations and your credit score is good, you should be fine.
Yeah, absolutely. And I would always suggest, like, talk to your lender, right? Like if you're considering doing, just talk to your lender, see if it's something that makes sense. Because if you think you have to pay all of your debt off, like, you'd be shocked. A lot of times you don't need to. And there's a lot of tricks to the trade in terms of credit score that you can do to radically improve your credit score in a very, very quick amount of time.
Talk about the rapid rescore for them.
Yeah. So with a rapid rescore, it's a think of it like it's a software that we use to, when we pull your credit, it leaves no guesswork in there for me. Like, let's say I'm really, really slow, right? And I'm not very smart. When we pull your credit, our system will automatically notify us when we get your credit score. It'll show us your Experian, your Equifax, and your TransUnion. And then right next to all three of those, it's going to have a plus sign and then a number. And then that number is telling me, hey, you can improve this person's credit score by X amount of points just by doing X, Y, and Z. And it'll tell us literally everything that you need to do. And, like, what's funny about credit is you have, Experian, TransUnion, and Equifax that they all have the same data. Like you'll have the same accounts across all three of the bureaus, but you got different credit scores with all three bureaus. Like, tell me how that works, right? So we don't want to try to guess it. Obviously, on my side, I know certain things that we do will improve your credit score. But I'm going to allow the system, the algorithms, the AI to tell me exactly what you need to do. And I'm going to remove all of that guesswork, because if you got three bureaus with all the same data and we got three different scores, who knows what's actually right? But there are similarities and parallels between all three of them. And our system will tell us exactly what you need to do. And then we can update your credit score, by the way, in process. So even if let's say you go under contract today, your score is at a 630, during the whole loan process, as long as you get it done before you actually close, that will adjust your pricing and your interest rate. So if you were at a 637, we did this rapid rescore. And in some cases, guys, I'm talking 70, 80 points in a week. Matter of fact, I did one for another agent in your office that he was at a 681 and we took him to a 762. And it was a pretty nice house. It was a $3.3 million home that we closed on a bank statement loan. And the difference in that credit score, guys, the interest rate alone on $3.3 million was over a 1% difference in rate. 1%, because it was a 10% down bank statement loan. Do you know what the savings actually is on 1% on a $3.3 million home? It's up there. I don't know the number off the top of my head, but it's pretty significant.
Oh, that's crazy.
Yeah.
I love that. Okay, so Jeff said we currently own a home out of state and want a second home in Central Florida. Are we still able to benefit from any incentives when buying a new build? So there are actually some builders who offer special incentives for second homes as well. I've seen where because usually the interest rates on a second home is going to be higher than it would be on a primary home, right? But I have seen where there are some builders who are offering special interest rates on second homes, specifically in this Polk County area. So yeah, there are still incentives now, Will, because what you guys don't know, that there are caps to how much incentives you can actually get, right? So it's going to be depending on the loan. It's going to be depending on how much you put for the down payment, especially when it comes to a conventional loan. Can you talk to them a little bit about that, Will?
Yeah, so there are certain caps that you can get in terms of you're talking about closing costs, like seller concession, right?
Yeah.
Okay, perfect. So with FHA, you can get up to 6% in closing costs, and that could be used to pay your actual closing costs. The extra additional you can use to buy down the interest rate and do a whole bunch of stuff. I'm actually doing it right now where the agent negotiated 6% concessions, and he's buying a home with less than $1,000 in his pocket. Because we're doing a down payment assistance for him to help cover the down payment. And then he's getting 6% to buy down the rate as well as cover all the closing costs. So you can get 6% on FHA. VA, you can also get up to 6%. There's only there's misconceptions about how much you can get on VA. But for the sake of this, I'm going to say it's 6%. Most people think it's 4%, but that's not actually the case. You can get 6% on VA. Conventional, you're impacted. So if you're putting less than 10% down on the home, you're going to be capped at 10% in terms of.
What do you mean at 10%? No.
Sorry, I had a brain fart. If you're putting 5% down, you're capped at 3%. If you're putting 5% down, you're capped at 3% in terms of your concessions. If you're putting 10% down, you can get up to, hold on, what is it? I know it's 6% if you put one. Give me 1 second. See, okay. I don't even need to. Hold on.
Are you talking to us, Will? We can't hear you again. Ooh, Technology, guys. Some things we could control, and stuff like this I can't control. Sorry, guys. He'll come back on. But how's this so far? Are you guys learning some stuff? I see some questions here. I'm going to address them with him as well.
Check. Mic check.
You're good.
You know, I found out what it is. Anytime I do anything on my phone, because I got a Mac, and anytime I do anything on my phone, it shuts off my audio on here for some whatever.
That's weird.
Yeah, I'm getting used to the Mac life. That sounds like that could be a song. Anyways, yeah, so if you go less than 10% down, you're going to be capped at 3% on conventional. If you put 10% down on conventional, you'll get up to 6% in concessions. And then if you put 25% down, you can get up to 9% on a conventional loan.
Oh, wow.
Yeah.
9%. You're doing a lot there.
You're doing, if you negotiate 9%, you deserve a pay raise, because that's crazy.
Yeah,
I've never
that's
seen anything
crazy.
like that.
Yeah, seriously. All right. David Rivera said, hi, Alexis. Awesome work. Thank you, David. Jackie said, hi, Alexis. Thanks again to you and Katrina for your patience this week. You're an amazing team. We're so happy to have found our dream home. Thank you so much, Jackie, for trusting us. We're super excited. Katrina helped her out as well. So you guys know that Katrina is a part of my team. So Jackie and her husband John, they were telling Katrina, oh my goodness, you and Katrina are like the same person. You guys are just like so much alike. So if you guys would be blessed to for Katrina to help you guys buy a house. Sean said, if I did that, I want Ocala. Ocala is definitely a great area. Karen said, congratulations, Jackie. Melanie said, does the property tax projection include the discount for Florida homestead exemption?
Yeah. So if you close on the home and you're like, what do you mean? When you're exempt? Like if you have exemption?
For homestead.
Yeah. So you would have to file for homestead to be able to do that. But yeah, whenever you do an estimate, we can fight with the underwriting and the lender to make sure that that's included if you're going to live there and you file for homestead.
Okay.
It has to be a primary residence.
Yeah, it has to be to file for Florida homestead tax exemption. Definitely has to be your primary residence. Also, I don't know if you guys know this, and Will, correct me if I'm not saying this right, but one time I had a client where he thought that it was a good idea not to tell anybody that he was still married. And he was purchasing a primary residence here in Florida. And we could not close on this house because since it was a primary residence, then his wife would have to sign off on title documents and things like that. And him and his wife was just not like, they weren't on talking terms. So we had to do something else, and he couldn't buy that house. So if it's your primary residence and you married, you're legally married, but you guys are not talking to each other and you guys don't have a good relationship, you're going to have to figure it out if you want a primary residence here in Florida.
Mm-hmm.
Okay.
And just for the record, there are ways, as long as you can be cordial with your ex, there are ways you could do it. Like you can close and then same exact day do a quit claim deed to remove them off the title.
Yeah, but this one, no, she wanted nothing to do with him. I don't know what he did, but she was, I was like, oh, okay. Okay. Sean said, would it be better to keep my home rented out and then just use equity or collateral to purchase my new house? Stay around 280 to 300, new builder paying closing costs and lower rate. I mean, it's going to depend if you qualify, right? Like that, it depends on what the rent is, how much you owe on your house, right? Will?
Yeah. I mean, it kind of just depends. We would have to talk about like what you're really looking for and if it makes sense for you to do. But yeah, if you rent it out, like you can vacate a home that you're currently living in and rent it out and offset the mortgage. And as a matter of fact, Alexis, we just did one like that last month that we just closed. Yeah. Literally same exact scenario. So yeah, you can but here's the things that you need. You need to get a lease agreement, and then you need to get proof of the security deposit for whatever that lease agreement actually is. And then now you'll also need to, this is something that changed like tail end of last year, might have been early this year, where now you do, whenever you're renting out a home that you're vacating, if there's no rental income showing on your tax returns, typically it won't be because you're vacating it, you will need to get an appraisal on that property as well, on the property you're vacating.
Yeah, so it has to make sense. If you're gonna rent it out, it has to make sense too, right? So like, let's say if the market rent is going for $2,500, but you're renting it out for $1,200, it doesn't make sense, right? And there's gonna be a lot of questions asked, right? So, and you could take out a HELOC, an equity line of credit. So yes, you could rent it out. You could take out a HELOC and use that as a down payment for your next house. Am I right, Will?
Absolutely, yep.
Okay, perfect. Sean said, can I do a recast on my present home right now?
Yes.
Okay. Sean said, Will said, yeah. And guys, remember, a lot of these questions, right? They're loaded questions because there's loaded answers because there's just so many different avenues. There's so many different factors, right? Everybody's file is different. Credit, that's income ratio, all of that. Okay. So this is just broad answers. If you want like something specific to you, then yeah, you want to reach out to Will and he can definitely help you and explain all of that. Okay. Will, how do I get you? Yeah, can you type in maybe the comment box your information?
Sure.
Karen said, I like the sound of that recasting. Sean said, okay, it's all speculative. I know, I understand. Okay. Sean said, okay, question. What about taking HELOC and then recast with that money? How would that work?
Recast what on your prime? Like take it. Hold on. You want to do a HELOC and then recast with the money you pulled out? Is this all on the same property?
Okay, Sean, is this all on the same property? Okay, I'm waiting for him to answer. Glory said, I'm an over-the-road truck driver and own a home in Pennsylvania. I'm thinking of moving to Florida 2026. My job is based out of Michigan. Would I have any issues getting approved for the loan to buy my house?
Yeah, but you travel constantly, like everywhere?
Yeah, she's an over-the-road truck driver.
Okay. As long as you can get a letter from your employer. Well, first off, are you 1099 or W-2?
Gloria, are you 1099 or W-2? All right, we'll come back to her. Steven said, what would be the interest rate difference between a 710 or 815 credit score?
Pretty significant. I couldn't tell you the exact off the top of my head because there are certain, like, it depends how much money you're putting down, the loan product, all of that, but it'll be pretty significant.
What's the highest credit score you could have? Do you know?
I mean, once you're above a 780, you're in the same tier as everybody else. So even if you have I've seen the highest I've seen is like 835. I heard people have 850s. I haven't seen
I've had clients where 850. Mm-hmm.
Yeah, like that's crazy. Like
can you like co-sign a car for me? Get the best interest rate, get the best payment.
Yeah, I mean that's one way you could do it. And I mean that's another kind of a secret, right? In terms of like boosting scores, is if you have a family member or a friend. Like this is the rules, though, guys. Like, and I'm giving you guys free game, so you got to understand. Like, it's all subjective here. But if you have a family member or a friend, somebody you personally know, you can have them add you as an authorized user on one of their accounts, and you will adopt all of their credit history whenever it reports to the creditor. So once a month they get a statement, and let's say somebody has 20 years credit history, never missed a payment, anything like that, and you got a 580 credit score. You're like, hey, Auntie, you did such a good job with your credit and finances. I'm trying to buy a house. Is there any way you can add me as an authorized user on some of your credit cards? And she got 20 years history of good history, no missed payments. And then let's say the credit to the credit bureaus reports on the 15th of every month. On the 15th of that next month, you're adopting all of the history. The 20 plus years of good history is now your history. You don't even need to get a card. But that's one of the secrets that the wealthy people understand, and that's something that you can utilize yourself if you find yourself in a situation where you're challenged with credit.
Yep. Anybody want to add me as an authorized user? You know where to find me. Just kidding, guys. Okay. Karen said learning a lot. Diana just said, I just signed on, so I'm not sure if anyone else asked this, but is there any assistance for closing costs? We will be using VA loans for down payment, building, I don't know what that says, building, closing, and EE funding currently. So that's gonna always be negotiable, Diana, whether you're doing a new build, right? New builds for 99% of the time, they're offering seller concessions, they're offering interest rate buy down. If you do a resale, that's where we negotiate for your seller closing costs, and then you can choose to use that to pay all of your closing costs. You can choose that to buy down the interest rate, whatever is going to work best for you at that point. Nika said, hi, Alexis. Hi, William. Sean said the recast question, because I thought he said on a new purchase or refi.
No, so you only recast something you already own. So you're not recasting a purchase. It's something that you're recasting after you close on like a property. Let's say I have a mortgage, you recast after you close on that at any point. So depending on the lender that the servicing rights of your lender, some of them may require you to make at least 2 payments, like whatever your actual mortgage payment is, before you do a recast. But every lender has different rules to recasting, but all the lenders I work with do allow recasting. But you would only recast something that you own. So not something that you're like, hey, I want to buy this house, I'm going to recast it, because it doesn't necessarily apply. You would close on it on a regular purchase and then recast a month or 2 afterwards. Okay. Or whenever you do afterwards, for that matter.
Kelly says, how do interest rates for a HELOC and for a mortgage correlate?
I mean, they're both impacted by the same things. I mean, they're all impacted by the Fed, and whatever the rates are, we have to abide by that, because on the lending side, without getting too specific in bank jargon, basically we have to, like, we do a loan, and then we have to sell off the loan to Fannie Mae, Freddie Mac, these big government agencies who are basically insuring these loans. And so if you're not on par with where the rates are, with what they're willing to buy, then that means that I have to hold it myself, and I have to front the money if they're not willing to buy it. So if I write a loan for $500,000 and I can't sell it to Fannie Mae or Freddie Mac, guess who has to come up with $500,000? Me.
Yeah.
So that's why the lenders, they play by the rules of whatever the government sets.
And Kelly, what happens too is, depending on where you get your HELOC through, it's just as a, like, you're getting a kind of like a second mortgage. Would you say, Will? Kind of like, because it puts a lien on your house, right? The HELOC. And it's basically like it's like a credit card type of thing, like where you can have a bank card for it. You get, sometimes it's gonna depend. Sometimes you could get 80% of your of the equity of the house. Will, am I saying that right?
Yeah, up to 80% of the value of the
But it's also going to depend on your credit score, your debt to income ratio, all of that stuff as well. Like, you have to qualify to get a HELOC. So we took out a HELOC early on, and I mean, we paid all that back already, but it was kind of like, yeah, the same thing. So the Glory, who's the truck driver, she said W-2, Will.
Yeah, you just need a letter from your employer stating that you work remote, and then you're good to go.
Okay, so work remote, even though, yeah, I mean, she's a truck driver, she's on the road, so yeah, it's not like she has to clock in Michigan type of thing, right?
Yeah, the thing is, the reason you need that letter is, like, I don't know if she has to go to Michigan every time to pick up a load or what have you, right? So, like, you just need a letter. If you are W-2, you just need a letter from your employer stating that you are allowed to work remote, and then you can buy pretty much anywhere as long as you have that letter as a primary residence.
Okay. Nika said, what can I do to get the best rate and lower monthly mortgage payments?
Great credit. Great credit. I mean, lower payments. I mean, if you put more money down, like, I mean, the smaller the mortgage, the cheaper your payment will be overall.
But But then
you know,
that also goes into, right, Will, would you say that also goes into how long do you think you're actually going to own that house for too, right? Like,
mhm.
because if you're putting all this money down, but you're going to sell probably, let's just say in 5 to 7 years, it may not make sense.
Yeah, exactly. Like I made the mistake of this is the third house that I'm living in now. My first two homes I intended to keep forever, and I sold both of them. So, and I bought down the rate and did all of that stuff. So like, because I had every intention of doing it, but when I started renting it out, I was like, I just don't want to deal with it. I had to replace, plumbing and stuff on one of the properties, and I was like, I don't want to deal with this. So I ended up just selling it. And you know, just it just kind of everybody has a different situation. The reality is, like, you have to understand yourself as well. Like, I got a friend of mine, he buys a house like every other year. He just gets bored and he just wants to relocate. So he just relocates like every 2 years. He's a lunatic because moving is the worst thing in the world, in my opinion. But that's him, right? So he does adjustable rates on all of his purchases because he already knows, as much as he loves his house, he's not going to stay in it because he's going to get bored.
Is he single and no kids?
Very not single, and 2 kids. Yes, as a matter of fact, both his kids are the same exact age of my kids. I don't know.
Wow.
It must have been our wives were in sync, I think.
And so they just pick up that would be hard. Like, especially for us having 6 kids, that would be hard. Moving every 2 years, that's a lot.
No, you got 6 helpers. That might be easier now, actually.
Crazy. You know the arguments that my husband and I get into when we're moving? If we're trying to build something from IKEA, absolutely not. No. So my house, I bought it in 2020 and I got a 1.99 interest rate. So my payments are below $2,000. I have a 5-bedroom, 3-bath home, and I don't think I'll sell this house. I think I'll rent it out. Eventually, when we're already outgrown this house, so I'm looking to see where we're gonna go next. But what's happening here in Davenport, I don't think I want to sell it. I think I'm just gonna rent it.
Yeah.
So yes, Nika, it is true that you can recast your loan, right? It is, if it's your house already, you can recast, right? Well,
yeah. Talk to your servicer and make sure they allow it. All of the loan lenders that I work with on the wholesale side, because there's retail lenders and there's wholesale lenders like myself. Every wholesale lender that I work with, they all have recasting. So just confirm with your lender that they'll allow it. I can't imagine they wouldn't allow it. It wouldn't make sense that they wouldn't. And if they don't, then come talk to me.
Yeah, absolutely. Sean said, damn, 850. Only thing that I have that's an 850 is my electric bill.
850 electric bill's crazy.
Yeah, I have my electric bill in the summertime is like 930.
Oh my goodness.
It's crazy. It's a whole nother mortgage right there.
Yeah.
Molly said I was able to roll my closing costs into my VA loan. That's possible, Will? People do that all the time.
100%. Yeah. I mean, when rates were lower, it was a lot more frequent that would happen. But on the lending side, let's just say the rate is a 6%. You can take a 6.5 and get your closing costs paid by the loan itself.
Okay, that's perfect. I love that. Okay, hold on. We're almost done. I'm just trying to get everybody's questions before we head out. Hold on. So Molly, yes, you did that in New York. It's possible to do that in Florida as well. Diana said, thank you. We're currently saving for closing and building emergency funds. It seems like with the builders, there are more incentives that can help with closing. For the most part, at this time, I would say so, yes. Sean said, I have a one about land purchase and purchasing a modular home. How easy or difficult is that loan to work and obtain with? Like a land purchase, Will?
The question is land, or is it a modular, or like?
Well, I think it's 2 questions. One about land purchase and then purchasing a modular home.
Got it. Yeah, I mean, land purchase, it's not gonna be like a standard 5-10% down payment or anything like that. You're gonna have to bring a lot more to the table.
A lot more?
I don't do land loans. But like, I know companies like Seacoast Bank is like, that's what their specialty is. But to my knowledge, it's like you're typically got to put significant down payment, like 30, 35, in some cases 50% down on to secure land loans.
There's a minimum too, right, Will? Like you
Yeah,
can't. I don't know it either, but yeah, because most of the people who pay, who buy, I've actually had quite a few land purchases this year, helping my clients, and it's all been cash.
yeah, because I mean, first off, like it's hard to lend on land. The reason why the down payments are typically larger is because like there's no collateral there for the lender if you stop making payments and things of that nature. So they want to protect whatever their investment is because there's nothing there and there's no guarantee anything will ever go there. That's why, like on the wholesale side, like I mean, we don't really do them. We do construction loans. We'll help build things if there's something on the land. We'll do that. But if it's straight land, it's not something like that I do. So it's not something that I can give you honest feedback on.
I respect that. Yeah, same. As far as financing is concerned, a lot of my land purchases, all the land purchases I've had were cash. Karen said, I'm planning to sell my home in the next 2 to 3 years, and depending on how much I can sell for, will definitely decide how much over the 25% down I will do. Sean said, good night. I have to bounce off Sunday errands. I will be reaching out to you next week. Perfect. Okay, Karen said, then with the recast, I can use the extra equity I received from the original sale to hopefully lower my monthly payments. Yes,
Yeah.
right?
Mm-hmm. Yep.
Sean said, hey, Alexis, it's Sean and Diane from Tampa with the fancy coffee bar sent in your email. We really want to definitely get together after Labor Day to discuss and look at some Ocala homes. Absolutely, Sean. We are here for you. Kelly said, I'm 100% commission salesperson with excellent credit and no debt. How will I be assessed for a mortgage qualification? And Kelly has been with this company for a really long time.
W-2 or 1099?
Your W-2 or 1099, Kelly? Melanie said, my daughter is 19 and receives SSI. Would her income be included along with mine and her dad's income during the mortgage loan process? Is the Social Security statement sufficient or more info needed?
A Social Security awards letter.
Okay,
basically,
so yeah.
The amount is, yeah.
So you're taking care of her, Melanie. She's still living in your house. You could use her income as well. Nika said, in Florida, are married couples forced to have both their names on the mortgage?
Yeah. Well, not on the mortgage, no. On title, yes.
On the title, yes.
But yeah. If you guys are split, and this is something that we come across literally all the time, you close, they would have to acknowledge the fact you got a mortgage. They would have to sign to go on title, and then like literally the same day, we just coordinate with the title company. I also have them sign a quitclaim deed removing them off the title.
Yeah. Okay, hold on. Sean said the loan purchase would do in like a turnkey purchase from example Palm Harbor modular loans. Yeah, we don't really specialize in like modular loans or land, or as far as financing land or together. So we wouldn't be able to kind of like steer you that right direction for that is concerned. I mean, Palm Harbor would have its own kind of most likely like lender that they deal with that they can help you buy the land and buy the modular home if that's something that you're interested in. Kelly said W-2.
Kelly's the commission only sales rep? Yeah. So yeah, just two years, average out the income. That's it.
Yeah.
So we would do what's called the verification of employment on our side. We'll send something over to your employer, that your employer fills it out, and then that's what we would use for income.
Okay, perfect. So guys, thank you so much, Will, for your for spending an hour with us on a Sunday. I really appreciate that. Guys, Will is my go-to mortgage broker. He has worked on a few deals this year with us, and it has been absolutely amazing. I've had to stop working with a few other ones just because it just wasn't a good fit. So that's why I'm constantly, interviewing and making sure that my partners are upholding to what we are about, right? And we're always about being real transparent, and not to say that everything is rainbow and sunshines, but we're always going to be transparent, and walk you and communicate with everything. Karen said this has been so informative. Thank you, Will. Thanks, Alexis. So yeah, I'm super excited. If you guys have any more financing questions for Will, did you put your information in here?
Yeah, I put it in here. I'm not sure if you saw it, but I put it inside this studio chat. But I don't know if anybody can see it.
No, nobody could see that. I don't even know how to get to the studio chat.
It's the only one I see here.
Oh,
So I don't know.
Okay, hold on. Let me put. I got it here. Hold on. All right. Let me put. Guys, this is his information. I'll pin it here. Hold on. There we go. So that's Will's information, right? So if you have any specific questions, please feel free to reach out to him. He's really, 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 really good. Really, really, really good. Thank you so much, Will. I really appreciate you.
Thank you. I appreciate you. And thanks for tuning in, everybody.
All right. All right, guys. Thank you for spending your Sunday with me. I'm feeling a little bit under the weather this weekend. This was a super chilled weekend. This upcoming week, tomorrow, we have a video going up of Ocala's newest community built by Richmond American Homes. We're actually toured their Amulite floor plan, which is a 5-bedroom, 3.5 bath, 2-car, over 3,000 square foot home. It has a separate, it has an in-law suite downstairs with its own wet area, wet bar area, family room, not the family room, excuse me, wet bar area, living room, bedroom, and bathroom, right? So this is perfect for your in-laws, or your parents are living with you, or maybe your older child, or a guest suite type of thing. So that's going to be on tomorrow's video. And then Tuesday, Katrina and I went to Wesley Chapel, and we toured this remodeled home on 1.43 of an acre. So you'll see that there as well. It looks like I missed somebody's question, but I'm looking back and I don't see it. Hold on. Hold on. Oh, okay. Hold on. I already have a home and would need to sell. Also, I have a freeze on my credit. I have been having a hard time unfreezing it. So yeah, unfreezing it, you have to reach out to the credit bureaus itself. The lender can't help you unfreeze it in that sense. You have to reach out to the credit bureaus to unfreeze it. I've had quite a few clients who has had their credit frozen, and it did take some time, but it's something that you would definitely have to do. All right, guys, I hope you have an amazing rest of your Sunday. I hope you have an amazing week. We'll be on next Sunday at 5:30. Let me know if you guys need anything, if you have more questions. Fidelia, if you have if you need more guidance, just send us an email, or you can also call Will or send him an email as well. Okay, his information is pinned to here. I hope you guys had a lot of value of today's call. Love you guys so much. Make sure you like, comment, subscribe on the videos, and yeah, see you next week.